Investor and trader, welcome back to an episode. So in this short video is an update of my small interactive broker account that I recently created it from delivering pizza over the weekend to fund this account. I want to see how far I can grow this account with realistic expectation. Before I get started, I'd like to disclaim I'm not a financial advisor or a stock guru or even claim to be one. I'm just a random guy on YouTube that likes to trade stock and invest in the stock market. So let's get into it. So if you watched this video, sorry, the last episode, I stopped right here. So it's already been 3 weeks since that video. Man, time just flies. So within these 3 weeks, as usual, I deliver pizza during the weekends, and I will record all this data. At the end of my shift, I will print out a summary. In that summary, it tells me everything I need to know to fill this out, including customer address and phone number, stuff like that. It's pretty cool. But of course, that's privacy, so I cannot post it. So these are the numbers right here, the hours and the delivery. As you can see, as time goes on, as for now, the delivery has decreased, right? That's because several factors. Is one, sales has slowed down a little bit. Two, there are more drivers now than there was around the month of January because we hired new drivers. So for me to be fair with other drivers is that we have to equally distribute the delivery among other drivers because I don't want to hog all the delivery just to make this video. You know what I mean? That'd be wrong. That's not ethical. So that's why it kind of dropped a little bit, but I'm fine too because this is realistic expectation here. So the goal is to deposit 1,200 a month from working here over the weekend. If I cannot reach it, I cannot reach it. There's nothing I can do, right? Unless I work more days. As you can see, next week I'll be working on the 14th, the 19th, and the 20th. The reason why I work on the 14th on Monday, as you can see, I don't work on Mondays, but I decided to work this Monday is because Monday for the pizza business is very, very busy. It's one of the busiest days out of the year next to Halloween. Pretty cool, right? So I want to help out here. So this is gonna help me fund my account even more. So the month of January, I already deposited 2,000. Now you may ask, I thought 1,200. What's up with 2,000? So let me go here and show and explain why I decided to do that. So here's the interactive broker account. Let me refresh. Okay. So in order to have access to margin, which is pretty much borrowing money from the broker, I need to have at least $2,000 balance right here. Because for me, right, again for me, I like to leverage, especially as a small account, so that I can magnify because the way I trade, I'll show you my trades later, why I need margin. Because I don't really trade penny stocks. If you watch my video, I trade blue chips. And blue chips, you need a lot of capital, right? That's why I need to have margin. So here's my account number. So this is a real account. And let's go to transfer or the deposit just to show how much, how much I put in and what I'm at right now. So up to 90 days. So let's go back to December just for the heck of it. All right, so I deposited 100 on the 26th of January, like pretty much last month, several weeks ago, just to test it out because this is my first time having this broker. It went through, so okay, so it seemed like legit. So then I deposited another 1,900. So technically I deposited 2,000, right? And now, as you can see, the account is at 2,100. So I did make several trades. So I pretty much gained 5% already. So if I go here, trade and order and trade, I think. Again, I'm still kind of new to the website. So these are the trades I did. As you can see, Facebook, Google, what do they have in common? It's a blue chip company. You need a lot of capital, you can see, right? And I've also option right here on this Foot Locker option. I'm just testing it out on my very first trade. So anyways, let's just go back to the main page right here. So yeah, but the thing is, this is pretty cool that you can actually see how many trades you did if you go here on under details. So you can see right here, right? Day trade left 3. That means I cannot use any more trades until I think Monday. I thought this pretty neat how they have this feature on Interactive Broker. But I can trade options, unlimited number of trades based on my cash balance. So if I find a good opportunity, I guess I'll trade around a $20 stock because that's all I have is 2,100. I cannot use this right here until Monday or Tuesday of next week. So as for now, I'm at 2,100, which is pretty cool. So 5% gain in a couple of days. Right here, I was down a little bit because a Foot Locker. So let's go to Foot Locker real quick because that was one of my very first trade in this Interactive Broker account. So Foot Locker, I had option cash secure put. So I think I sold put right here. As you can see, when you sell put, you want the stock to go up, not down, right? Because if the stock goes down, your account will be negative. That's why my account was negative because of the Foot Locker trade. And then this is just Google and Facebook trade I did. So back to this chart right here. So the month of February, I'm probably not going to deposit 1,200 because I want to stick to these numbers. So that means I'm going to deposit around 400 because you can see these two numbers add up to 2,400, and we go from there. Now these are the compound of 30% I calculated. The reason why I select 30% was because for the past 5 or 6 years of me been doing this, my average annual return is around 30%. That's why I want to stick to 30. And it beat the S&P and the Dow and stuff like that. So I like 30%. I think it's very doable if you know what you're doing and you don't take too much risk. So at the end of February, I want my account to be more than this right here because that's the goal, right? But we will see. I think I can do it. I mean, yeah, it's all my trades are pretty safe, not too crazy. So let's talk about some of the stock that I'm watching right now. So one stock that I'm watching right now is T Rowe. T Rowe is one of the safe company that you cannot go wrong. It's a financial company. As you can see, here's the weekly chart. Once in a while, T Rowe touches this red moving average, which is the 200 weekly EMA. Sometimes it goes slightly below. But as you can see, this is where you do not really want to buy. You can if you want, but I prefer not to. This is where you want to buy all these retracement, right? As an investor or a trader, your maximum profit is buy on the dip, right? So right now you see how it does the same thing, and now this is the retracement. It pulled back quite a bit from 220 down to 140 or 145 or slightly below. I don't know. So I'm thinking T Rowe is a good potential trade. For my small account, I can buy like 10 shares or 20 shares, even 30 shares if I want to go maximize my margin buying power. Another one I'm watching is ARGO. Now, I'm not familiar with this company, but for the past couple of days, this stock has been pulling back quite a bit, and it got my attention. So it went from 55 down to 42, which is quite significant, over 20% in past 3 days. But notice something here that I noticed. See this candle, and then this candle, and then this candle. The candle is getting smaller as days goes on. That means the momentum of selling is slowing down because it's quite oversold. So I'm expecting a little pop pretty soon. So let's go to the daily and let's go to 1 year. See, it's quite heavy. Right? It pulled back all the way back to March 2021 price action. So this stock has been tanked quite a bit. So I'm watching the $40 level. We'll see if the price action will get there. And tomorrow's Friday too, so I'll be watching this closely. I want to make a trade out of this stock right here. The sucks thing is they don't have options, so it kind of sucks. I want to trade option on this, but nah, I cannot. Since we have some time, I'd like to go over my other account that I have not made an update for like 3 months already, right? It's been a while. That is my small option account. So let's just go over this one too. So this option account that I created it back in October, so like what, 5 months already? Small account, right now it's at 14. Vast majority of it is from my own money that I put in as time goes on, as you can see. So this account is doing pretty good. This is the purpose of this account again is for option trading. Well, because I'm practicing option. I'm still kind of new to option. I just barely learned option around this time frame right here, and I got so excited. I'm like, hey, let's create an option account and see how far I can, take the account. So if I go to close position, so I'm doing pretty good on this account. So far, okay. I think I did okay. So I took 2 red trades, which is a Foot Locker and CCL. The rest is doing pretty well. Now, most of the majority of the money that I made was from PAGS, from option. I currently own 200 shares of PAGS. So let's go to the chart. So PAGS, just like any other tech stock, it's been selling off quite heavy. I bought my very first share of, well, I got into the trade of PAGS around 32 of cash secure put and stuff like that. So as you can see, the stock tanked, so I got a sign, right? So my average cost for PAGS, like the true average cost based on the broker statement, is around 29 and a half, like way up here. So let me draw a line real quick just to show you guys. And this is how I use option to dig my way out, or average cost, or whatever you want to call it. But I haven't bought any more shares ever since then. So I'm down like 40%, just like any other growth stocks were down 40, 50, 60, 70%, right? But lucky to option that I have the shares to do cover calls and cash secure put and stuff like that. But I haven't done that lately because I noticed the stock keep falling, right? So I need to dig my way out. So I've been uh, selling calls, collect that call, and buy some put and stuff like that. Pretty much just dig my way out, and I eventually collected quite a bit. So if we go here to the calculator, so let's add these number up and see where we get. So I have collected $1,282.70. Take this number, divide by 200, because I have 200 shares. So pretty much I have collected $6.41 per share. And I have my average cost right now, based on the broker, is 29.56, I think, or somewhere around there, around the half dollar. So my average cost around $23 if you do all this, collecting cover calls and selling put and stuff like that, or buy put just to leverage. So PAGS, my average cost, this was my original average cost, but thanks to option, and I take advantage of it, that I managed to bring down my average cost to 23 and a half, or low 23, like somewhere right here. I have not bought any more shares, obviously, because I think this thing could go down to 15 or even below potential. Because if you look at the monthly chart, it's pretty negative, right? But notice the cash stick is getting kind of oversold. But then again, the ultimate that I'm watching right here is around the $14 range. Yeah, right here, 13, 14. It can hit it. I don't know. And then I don't want to sell cash secure put either because earning is coming up. I don't know what earnings gonna do to the stock because you can see lately earning is pretty crazy. Either spike up, spike down 10, 20%, just like Facebook did, right? So I'm gonna wait a little bit to see what happened. If it breaks below this, I'm definitely gonna sell cash secure put around $10 to average my cost down. Because as you can see the calculator, my average cost, including all the premium that I collected, is around 23. I think when you're down 50, 60, 70%, it's a good time to average your cost down. Nevertheless, PAGS on the fundamental base, from my opinion, I think the stock is quite oversold and undervalued. That's just my opinion. PAGS is pretty much a payment processor based in Brazil, kind of like Square in a way. Just pretty much that's how they just process payments. Their direct competitor is STNE. I'm also watching STNE very closely because I think this stock again is also oversold. It went from 90 something down to 13. I'm watching the 10, 12, $11 range. Now this stock been hammered because of that bad investment that they did, and that's how they lose so much money on the last quarter earning, and that's how the stock tanked drastically. But I think fundamental, I think the stock is okay. The only positive thing I can think about the stock is Warren Buffett. He also owned this stock back in 2018, around $20 ish a share. Right now, if you do buy this stock, now I'm not recommending you to buy it, but what I'm trying to say is, if you decide to buy this stock, you enter a much better price than Mr. Warren Buffett. But again, Mr. Warren Buffett, he holds this thing like for I don't know how long, right? For decades. So short term, this thing could go down to $5 all he cares, right? So yeah, I'm watching this stock also. And on top of that is a $13 stock, which kind of fit for this small account right here, right? Because this is kind of 2000. So we will see. On top of that, premium for this stock right here is also pretty good. But I don't want to focus on just the premium. I need to focus on the price action also, because sometimes these can go down for a very long time, just like any other growth stock right now that are getting hammered. All right, so that's the account update. Pretty much two accounts that I went over: my option account and my interactive broker account. Now these are just small account, but still, I just want to see how far I can grow it in 2022 and document it along the way. All right, hopefully you guys enjoyed the video. See you guys in the next one. Bye.